What's up, future millionaires? Mr. Prosperity here, and let's be real, you're not here to mess around with some chump change. You want to build a monster investment portfolio? One that would make Warren Buffett give you a head nod. We're diving deep into the 15 things you absolutely need to know to make your money work harder than a hamster on a wheel. We're talking stocks, bonds, real estate, and yes, even how to make that rubber chicken investment soar. Just kidding. Or am I? Get ready for some serious financial knowledge because by the end of this video, you'll be well on your way to building that monster portfolio. Oh, and stick around for a special bonus tip at the end that'll have you swimming in cash like Scrooge McDuck. Alright, let's kick things off with the most important rule of all. Discipline, baby. Just like Chuck Norris doesn't quit, neither should you. Building a monster portfolio isn't about getting rich quick, it's about staying consistent even when the market throws a tantrum. Think of it like building a skyscraper. It takes a plan, dedication, and a whole lot of cement, that's your discipline, to hold it all together. So buckle up, because we're about to lay the foundation for your financial empire. Remember, Rome wasn't built in a day, and neither are monster portfolios. But with discipline as your trusty sidekick, you'll be well on your way to conquering the financial world. Even the lone wolf investor needs a wingman sometimes. Think of a financial advisor as your very own Robin, here to provide expert advice, navigate tricky market situations, and stop you from making any investment decisions that would make your portfolio cry. They've got the experience, the know-how, and the fancy spreadsheets to help you reach your financial goals faster than you can say kapow. So, don't be afraid to call in the financial cavalry when you need it. Hold your horses, Warren Buffett. Building a monster portfolio takes time. It's a marathon, not a sprint. You're not going to get rich overnight. The market has its ups and downs, its twists and turns, just like your favorite roller coaster. But here's the thing. If you jump off every time there's a little dip, you're going to miss out on the big climbs. Think of it like growing a tree. You plant the seed, water it, and give it time to grow. So be patient, my friend, and let the magic of compounding work its wonders. Taxes. The word alone is enough to make anyone cringe. But here's the deal. Understanding how taxes work can actually help you keep more of your hard-earned money in your pocket. We're talking about utilizing those tax-advantaged accounts like a boss. Think of them as secret weapons in your financial arsenal. You've got your 401, KKs, your IRAs, and a whole bunch of other acronyms that might sound like alphabet soup. But trust me, they're your friends. These accounts come with special tax breaks that can save you a ton of money in the long run. So do yourself a favor and learn about them. Or better yet, talk to a tax professional. Remember, the more money you keep, the more you have to invest and grow that monster portfolio. Remember the story of the tortoise and the hare? Slow and steady wins the race, right? Well, the same goes for investing. You don't need to be dropping huge sums of cash all at once. In fact, it's much better to invest regularly, even if it's just a small amount. Think of it like building a muscle. You wouldn't go to the gym once, lift 1,000,000 pounds, and expect to look like Arnold Schwarzenegger, right? Investing is the same way. By consistently putting money into the market, you're taking advantage of something called dollar cost averaging. It's a fancy way of saying that you're buying more shares when the price is low and fewer shares when the price is high. So, set up those automatic contributions and let your money work its magic. Life is full of surprises, and not all of them are good. You never know when you might get hit with an unexpected expense, like a car repair or a medical bill. That's where your emergency fund comes in. It's your financial safety net, there to catch you when life throws you a curveball. Having an emergency fund means you won't have to dip into your investments or, worse, go into debt to cover those unexpected costs. Aim to have 3 to 6 months worth of living expenses stashed away in a safe and accessible account. So, build that emergency fund and sleep soundly knowing you've got your back. Let's be honest, none of us can predict the future. If we could, we'd all be sipping margaritas on our private islands right now. The stock market is like a wild animal, unpredictable and impossible to tame. Trying to time the market buying low and selling high is a fool's errand. Even the experts get it wrong all the time. Instead of trying to outsmart the market, focus on what you can control, your investment strategy. Choose quality investments, diversify your portfolio, and stay invested for the long haul. Remember, time in the market is more important than timing the market. Listen up, investors. The more you know, the better equipped you'll be to make smart decisions with your money. We're not talking about becoming a financial guru overnight, but staying informed about market trends, economic news, and the performance of your investments is crucial. Think of it like this. You wouldn't walk into a car dealership and buy the first car you see without doing any research, right? The same goes for investing. Stay up to date on financial news, read books, listen to podcasts, and follow reputable financial websites. Remember, knowledge is power, and in the world of investing, it can also mean more money in your pocket. Here's a secret the financial industry doesn't want you to know. Fees can be silent killers of your returns. Those seemingly small percentages that you pay in expense ratios, trading commissions, and other charges can add up over time, eating into your hard-earned profits. The good news is that you have the power to minimize these fees. Look for low-cost index funds, negotiate lower trading commissions, and be mindful of any hidden fees lurking in the fine print. Remember, every dollar you save on fees is a dollar that stays invested and working towards building your monster portfolio. Imagine your investment portfolio is like a garden. You've planted different types of flowers, each representing a different asset class. Over time, some flowers might grow faster than others, throwing your garden out of balance. That's where rebalancing comes in. It's like giving your garden a trim, selling some of the overgrown flowers, and using the proceeds to buy more of the lagging ones. Rebalancing helps you maintain your desired asset allocation and manage your risk. It's like having a financial gardener who keeps your portfolio looking its best. Let's face it, not all of us have the time or desire to research individual stocks and bonds like a Wall Street analyst. That's where index funds come in. They're like the easy button of investing, providing instant diversification and low costs. An index fund tracks a specific market index like the S&P 500 by investing in all the companies listed on that index. It's like buying a tiny slice of the entire stock market in one go. Index funds are a great way to get started with investing, especially if you're new to the game. So consider adding some index funds to your portfolio and enjoy the benefits of effortless diversification. You've probably heard the saying, don't put all your eggs in one basket. Well, the same goes for investing. Diversifying across different asset classes is essential, but don't stop there. You also want to diversify within those asset classes. Think of it like building a house. You wouldn't just use wood for everything, right? You'd use a combination of materials like concrete, steel, and glass to create a strong and resilient structure. The same goes for your portfolio. Don't just invest in large cap stocks. Spread your bets by investing in small cap stocks, international stocks, bonds, real estate, and other asset classes. Remember, diversification is your best defense against market volatility. Alright, future tycoons, let's talk about building a financial fortress that would make Fort Knox jealous. And how do we do that? By diversifying across different asset classes, baby. Imagine your portfolio as a delicious pizza, because who doesn't love pizza? You wouldn't want just one topping, would you? No way. You want pepperoni, mushrooms, onions, maybe even some pineapple if you're feeling adventurous. Investing is the same way. You don't want all your money in just stocks or just bonds. You want a mix of different asset classes like real estate, commodities, and even a sprinkle of that digital gold cryptocurrency. So diversify that portfolio, my friend, and build yourself a financial fortress that can weather any storm. Let's talk risk, baby. Just like ordering a curry, you gotta know your spice level when it comes to investing. Some people like it mild and mellow, while others like it hot enough to melt your face off. Your risk tolerance is how much risk you're comfortable taking with your investments. Are you cool with some ups and downs, or do you prefer a smoother ride? There's no right or wrong answer, but knowing your risk tolerance is crucial for building a portfolio that aligns with your financial goals. So, before you start throwing money at the next hot stock tip, take some time to assess your risk tolerance. Alright, before we embark on this epic journey to building a monster portfolio, we need to know where we're going, right? You wouldn't hop on a plane without knowing your destination, would you? Investing is the same way. You need to have clear investment goals in mind. Are you saving for retirement, a down payment on a house, a trip to space with Elon Musk? Your investment goals will determine your time horizon, risk tolerance, and the types of investments you choose. So, Before you start throwing money at the stock market, take some time to define your financial destination. Let's map out your financial future. There you have it, future millionaires. The 15 essential steps to building a monster investment portfolio that will have you swimming in cash like Scrooge McDuck. Remember, building wealth is a journey, not a destination. There will be ups and downs, twists and turns, but with the right knowledge and a little bit of hustle, you can achieve your financial dreams. So go out there, put these steps into action, and start building that monster portfolio. And don't forget to join me next Wednesday for another episode of Mr. Prosperity, where we'll be diving deep into the different types of investments. Until then, stay prosperous.